Hey guys, how's it going? My name is Hamish Hodder, and today we're going to be going through my investment portfolio, March 2018. So in this video, I'm going to start off by going through what my portfolio composition is. So how much do I have in stocks and how much do I have in cash, and explain a little bit of why I have the cash position that I have at the moment. Then we're going to go through some of the recent sales that I've made, some of the recent trades that I've done on the market in the last couple of months. And lastly, I'm going to go through exactly what my portfolio is made up of now and what percentages the stocks make up that are in there. If you like this type of video, make sure you hit the like button. If you haven't already, make sure you hit subscribe, and let's jump into it. So to start off with, I'm just going to go through what my portfolio composition is at the moment. So how much do I have in stocks versus how much do I have in cash? So at the current moment, I have 56% of my portfolio in cash and 44% in stocks. And immediately you're probably going to think that's a lot of cash, and it is. It's actually a little bit more cash than I would like to have at this point, considering that valuations are high. However, interest rates are still quite low, and interest rates pretty much act as gravity to stocks. Warren Buffett says that over and over again, and I believe that to be true. So while stocks are valued high, they're justifiably high due to the low interest rates. So I would like to have a little bit more money in the stock market at the current moment. However, there's two key reasons why I have so much cash at the moment. So the first reason is that some of the stocks that were in my portfolio became overvalued. So simply their price just rose above what I valued them at, and therefore I had to sell them. And if you're holding stocks over what you've valued them at, if you continue to hold them while they exceed their value, you're not investing anymore. You're speculating, because you're hoping that the price continues to rise, even though you know that it shouldn't rise because the value is lower than the price. So that is just pure speculation, and that's something that I don't want to do in the stock market. In a little bit, I'll talk about those overvalued stocks and what kind of profit I made on them when I sold them. So the second reason that I have such a heavy cash position at the moment is simply because I haven't been able to find any stocks with a big enough margin of safety. So when I sold these stocks that became overvalued, I looked into the market and I wanted to find some undervalued stocks in order to move that cash into. However, all I've been able to find is stocks that are, one, at their value, over their value, or maybe just slightly under their value. So I don't get I can't get that 50% margin of safety in order to ensure that we get great returns. And this is completely normal, because the stage that we're at in the economic cycle, in the debt cycle, is that we're right at the top. Even though I think stocks will continue to rise over the next year or two, valuations are getting to the top end, and it's only a matter of time, 1 or 2 years, before the pendulum swings and most stocks are undervalued instead of most stocks being overvalued. So now let's go through what those stocks were that I sold recently, and what price I bought them at, and what price I sold them at, and what kind of profit I made on those stocks. So the first stock that I sold was my Adobe position. So Adobe, as you know, is a creative software company. Their primary revenue comes from their Creative Cloud Suite, which is their Photoshop, Premiere Pro, and all those other creative digital media softwares. So I bought Adobe back in October for $174 a share. I paid a little bit more than I would have liked to for it. I value Adobe shares at around $200 a share, so I probably wanted to pay in the low 100s. However, I paid a little bit more, and I ended up selling that stock 2 months later for $197 a share, so just under what I valued it at. And that was for a profit of 8% in 2 months, including brokerage costs. So the second stock that I sold recently was my Google position. So I bought Google back in September for $918, and at the time I valued Google shares at around $1,500 a share. And if you've seen my video on valuing Google, you would know that I no longer value Google at that, and that's because I simply changed my estimate, my forecast, growth forecast, from 20% down to 15%. And that brought the value of the stock down from $1,500 to about $1,100 a share. So I was able to sell my Google position for just under $1,100 a share. And that earned me a profit of about 13% in 5 months. So the last stock that I've sold recently was on the ASX, and it's Appen. It's the leading AI stock in data annotation. I bought this stock in December for $7.20 a share, and I value the shares of this stock at around $10.50. And recently their annual report came out and they killed it. They did really great growth numbers. However, the stock actually rose more than it should have for the results. It went up, I think, over 30% by midday, and I was able to sell those shares for $10.69 per share. So that was for a profit of 44% in 2.5 months. Now I'll just run you through what my overall realized returns have been in the last 8 months, in the last financial year. So our financial year in Australia goes from July to June. So from July to now is 8 months. And I like to talk about realized gains because unrealized gains don't really mean anything to me unless I've bought a really bad stock. Because essentially, I don't really care if the stock price goes down in the short term if I'm not planning on selling it. I still own that piece of business and I still believe in the business in the long term. The price doesn't really mean anything to me. The price only means something to me when I'm selling the stock. So on ASX shares in the last 8 months, I've made almost 18% returns compared to the market, which has only returned about 4.5% in that time. On my US stocks, I've returned 10.4%, while the S&P has returned 10.5%, so I slightly underperformed the S&P on US stocks. However, overall, I earned a return of around 15% in the last 8 months, which I'm really happy with. So finally, let's talk about what stocks make up my portfolio right now. What stocks are they, and how much of the portfolio do each of them take up? So my smallest position is in NAB stock. This is on the ASX, National Australia Bank, and this is just a dividend stock for me essentially. The stock price doesn't really move, but it pays out a 5% dividend, which is really great. And at the moment, that stock is 13% of my portfolio. Next is VAS, Vanguard Australian Shares Index, and this is an index of the ASX, the ASX 300, the top 300 companies in Australia. And this is returned, well, in the market, it's only returned about 4.5%, as I said before. However, it pays a really good dividend. It pays a 4.5% dividend at the moment. So that's really great. And VAS takes up about 17% of my stock portfolio. My third position is in YY Inc. This is on the NASDAQ. However, it's a Chinese online streaming service, and they have gaming streaming and entertainment streaming and that sort of thing. And this stock doesn't really fit my criteria for really low risk investing. However, it's just a really high growth company, and the valuation was so low on it when I got it, I just absolutely couldn't resist. This company's been growing at 30, 40, 50%. It's been doing crazy numbers over the past 3 or 4 years, and when I got it, it was trading at a PE of 15, which is incredibly low, and it's performed very well for me over the past couple of months. And YY takes up about 23% of my stock portfolio. So my last position at the current moment is in Thor Industries. So they're an RV or camper van manufacturer. If you know Jayco, they own Jayco and they manufacture Jayco camper vans and RVs. And Thor takes up, this position is too big. It's 47% of my stock portfolio, and I never planned on it being that big of a position. However, with the recent sales of my other shares, it's just been my biggest position now, and I do plan on reducing that over the next couple years, as that business is really cyclical. So what that means is it overperforms the market when the market's doing well, and it underperforms the market when the market's doing bad. And that's simply because when people are tight for money, when people have to pay down their debts, no one's buying camper vans, or not many people are buying caravans. When you compare to maybe like a toilet paper company or something like that, people are still going to buy the same amount of toilet paper in a recession as in a really good market. So that's it, guys. I hope you enjoyed. I look forward to making this video again in the future. If you really liked it, make sure you hit the like button. Let us know your thoughts in the comments so I know what you guys are thinking. If you haven't already, make sure you subscribe, and I'll see you in the next one. Oh, one last thing. If you have any video ideas or something you want me to showcase on this channel, just make sure you leave it in the comments or send me an email or send me a message on Twitter. The really good thing about having a small channel at the beginning is that I can read every single one of your comments and reply to you, and I can customize this channel so that it's a really nice, close community for us to share ideas and talk about what you guys want to hear, not just what I have to say.